Uber stock price just broke out, despite Robotaxi launch this Thursday by Elon Musk. Uber top analysis. Without further ado, let's go over to the top analysis. Beginning with technical analysis. As you can see on the chart, Uber stock has been trending up since December 2022, above the white line. In March 2024, Uber stock felt some fear from investors and started a pullback until it reached around $58 a share price. Since then, Uber stock price has been ranging inside a rising wedge triangle chart pattern, which was not broken until recently. But Uber stock just broke out the counter trend line and retested on it, which could trigger another bull run, despite the Robotaxi launch by Elon Musk, scheduled to be late this Thursday, on October 10th. I am not a financial advisor, but from my technical analysis perspective, what just happened signals that investors are now willing to test a new all-time high for Uber stock. Now let's go over some fundamental analysis to identify all the risks Uber business will be facing. Based on its current growth and profitability trajectory, Uber CEO Dara Khosrowshahi appears unconcerned about the rise of Tesla's Robotaxi and remains skeptical. He cites concerns that Tesla owners might be reluctant to have their cars driven by strangers. But Uber faces a looming threat from the expansion of autonomous vehicles, which could severely disrupt its business model. Once Robotaxis achieves widespread adoption, the market will likely be dominated by a few major players, due to the complexity of the technology, the magnitude of data, and significant difficulties of scale in building and maintaining fleets. Even though Robotaxi involves high initial investment costs, potential profitability is promising. Here are 5 highlights. 1. In the US, Uber charges between $2 to $4 per mile, while rates in other regions typically exceed $1 per mile. 2. Robotaxis are projected to charge about $1 per mile, making them a highly competitive alternative. 3. A Robotaxi driving 50,000 miles per year, approximately 136 miles per day, could generate $50,000 in annual revenue. 4. Operating costs, including charging, cleaning, maintenance, and insurance, are estimated to be under 50 cents per mile, potentially yielding an annual profit of $25,000 per vehicle, to be shared between the vehicle owner and the network operator. 5. Initial Robotaxi prototypes exceeded $150,000, but current production models are nearing a cost of $30,000, significantly reducing investment barriers. While Uber's valuation might seem reasonable given its current growth and profitability trajectory, the risk posed by Robotaxis has not been fully factored in. From now on, Uber's share price valuation will depend heavily on the company's ability to improve profit margins and adapt to the arrival of Robotaxis. Uber's revenue multiple is around 3.5, which suggests a price-to-earnings ratio of about 30 times when using a normalized profit margin. However, Uber's near-term performance is likely to depend more on continued margin improvement than on valuation adjustments. Although autonomous vehicle companies have partnered with Uber to aggregate rider demand, they will eventually seek to compete directly for better unit economics in a concentrated market. As Robotaxis gains prominence in the coming years, major players in the sector will likely try to bypass Uber altogether, and even if Uber retains its role as an intermediary, its take rate may come under pressure, presenting a considerable downside risk to its stock valuation. Don't miss out on the video above. Thanks for watching. Good luck and good profit. By Edward Cash Trader. Please read the disclaimer in the description below.